All right, let's just jump right into this. Welcome to another Explainer, where we are diving deep into the analysis behind a truly wild, unprecedented financial milestone, Elon Musk becoming the world's very first trillionaire, following the SpaceX IPO in June 2026. This event at the NASDAQ wasn't just your standard public offering, it was a historic anomaly. Literally, in the very first second of trading, a single individual's net worth crossed a line that, honestly, previously seemed like pure science fiction. But as our sources point out, reaching this milestone isn't just a simple, straightforward story of a company selling rockets. Not at all. It is a massive, complex web of market psychology, strategic tax maneuvering, and political ecosystems. So we're going to break down exactly how the source material deconstructs this trillion-dollar valuation. But hey, before we get into the complex mechanisms of all of this wealth generation, let's just take a second and pause. We need to try and comprehend this massive number, $1 trillion. The analysis makes a really great point here. Human brains just aren't wired to comprehend numbers with 12 zeros behind them. We casually throw around words like millions, billions, and trillions all the time, right? But processing the true physical scale of what a trillion actually represents is incredibly difficult. Just for some context, the source notes that there are only about 21 countries in the entire world with a GDP greater than $1 trillion. And now, we are talking about the estimated net worth of a single human being crossing that exact same threshold. And honestly, this perfectly captures the astronomical leap from a billion to a trillion. The source uses this absolutely fascinating time analogy to put this wealth into perspective, and it is pretty mind-blowing. Okay, think about it like this. If you were to go back in time 1 million seconds, you would only travel back about 11 and a half days, just a week and a half, right? If you go back 1 billion seconds, you travel back roughly 32 years. But if you try to go back 1 trillion seconds, you'd be transported 31,000 years into the past, literally to a time long before human civilization even began. So going from a billion to a trillion isn't just one step up, it is an entirely different universe of scale. So today, we are going to peel back the layers of this valuation. Our agenda is 1. Decoding $1 trillion. 2. The paper wealth illusion. 3. Selling dreams, not fundamentals. 4. The buy, borrow, die strategy. 5. Politics and favorable policies. And 6. Wealth disparity and taxes. Starting right off with Section 1, Decoding $1 trillion. To actually understand this unimaginable net worth, we really have to look at the fundamental difference between liquid cash and corporate valuations. Hitting trillionaire status doesn't mean there's $1 trillion just sitting in a checking account somewhere. In fact, Forbes and other wealth trackers calculate this based on corporate holdings. This is primarily his roughly 38% stake in SpaceX, which the source notes hit a $2.2 trillion valuation, alongside his massive shares in Tesla. The analysis highlights that 99.9% of this wealth is completely tied up in company stock. Only a microscopic 0.1% fraction exists as actual liquid cash. Now sure, 0.1% of $1 trillion is still $1 billion, but the vast, overwhelming majority of this wealth is locked away in shares. Which leads us directly into Section 2, the paper wealth illusion. This brings us to a critical concept that serves as the foundation and perhaps the absolute biggest vulnerability of modern megawealth, and that's paper wealth. This is wealth that looks spectacular on a computer screen, but it cannot be easily converted to cash without some pretty devastating consequences. The analysis points out a fascinating paradox here. If someone actually tried to sell a massive chunk of their shares to access billions or trillions in cash, the market would instantly panic. A massive influx of shares would flood the market, and other investors, assuming the founder is losing faith in their own company, would desperately start selling too. This would cause the value of that very paper wealth to plummet almost overnight. So in a lot of ways, this trillion-dollar figure is essentially a psychological number. It's entirely dependent on market confidence and the assumption that the shares won't actually be sold en masse. Moving on to Section 3, Selling Dreams, Not Fundamentals. So if this wealth relies entirely on market confidence, what is actually driving that confidence? Especially considering the source data shows SpaceX was operating at a $5 billion loss in 2025. To answer that, the analysis points to economist Burton Malkiel and his famous book, A Random Walk Down Wall Street. Malkiel basically proposes two ways stocks are valued. First, you have the firm foundations theory. This is where a company is valued based on hard numbers, actual revenue, actual profit margins, production metrics, the tangible stuff. Then there is the castles in the air theory. Under this theory, valuations are driven by psychological hype, grand promises, and the belief that someone else is going to pay more for the stock tomorrow. The source argues that these companies fall firmly into this castles in the air category. Investors aren't necessarily buying into the current profit margins. They're buying into the dream of colonizing Mars, futuristic robotaxis, and space-based data centers. And when we track the past decade based on the source material, we can clearly see a pattern of some incredibly ambitious technological promises. Look at this timeline. In 2013, the Hyperloop was proposed to connect cities in minutes. Yet the source notes the concept effectively died by 2023. In 2014, a manned Mars mission was promised within 10 to 12 years, a deadline that has firmly come and gone. In 2015, fully autonomous self-driving was promised within 3 years. And in 2019, claims were made that 1 million robotaxis would be on the road by the very next year. The source critically highlights that as of 2026, these world-changing promises remain largely unfulfilled. This strongly suggests that the stock market is repeatedly rewarding the promise of the future rather than the delivery of the present. And this is exactly why the source includes this striking quote from the famous investor Steve Eisman. You might know him as the guy who famously predicted the 2008 financial crisis. When describing the SpaceX IPO, Eisman simply stated, "This is an IPO of a sci-fi story tailor-made for a sci-fi cult." The analysis uses this specific perspective to argue that the valuation is not a fundamentally sound financial event rooted in current profits. Instead, it's a heavily hyped phenomenon driven by a dedicated following that believes implicitly in the founder's vision, totally regardless of delayed timelines. Let's look at Section 4, the buy, borrow, die strategy. Now, you might be wondering, if billionaires can't easily sell their paper wealth without crashing the stock and triggering massive taxes, how on earth do they fund their lifestyles? Well, the analysis elegantly maps out a known tax loophole called buy, borrow, die. It works like this. Step 1, buy and hold. You just never sell your shares. If you don't sell, you don't realize a gain, and therefore you don't owe any income or capital gains tax. Step 2, borrow. When you need cash to buy a mansion or, say, I don't know, a massive social media platform, you use your billions in paper wealth as collateral to secure incredibly low-interest bank loans. The source notes that Musk leveraged $62.5 billion of his Tesla shares to secure a massive tax-free bank loan to buy Twitter back in 2022. That borrowed money, entirely tax-free. Step 3, die. When the billionaire passes away, the assets go to their heirs. Under current tax rules, the baseline value of those assets is reset, effectively wiping out the capital gains taxes on all the growth that happened during their lifetime. The heirs can then just sell a small fraction to pay off the bank loans and keep the rest. It is a brilliant, entirely legal, closed loop of wealth preservation. Bringing us to Section 5, politics and favorable policies. Impartially reporting on the source's findings here, reaching the trillion-dollar mark in 2026 wasn't just strictly about market dynamics. According to the analysis, it allegedly involved a highly favorable political ecosystem following the 2024 elections. The source points out that following a reported $90 million donation to the Trump campaign, several unprecedented rule changes allegedly occurred to pave the way for the SpaceX IPO. For example, the NASDAQ 100 typically requires new companies to wait and stabilize before listing them. This is to protect the retirement funds of millions of everyday people. The source alleges this rule was bypassed with a new 15-day fast entry rule explicitly for SpaceX. Furthermore, the source cites a June 10th SEC letter granting exemptions to brokers handling the IPO, which allegedly put $70 billion of retail money at risk to ensure the IPO's success. On top of that, favorable rulings from the FCC gave Starlink control over 10,300 satellites, cementing a near monopoly in low Earth orbit. The analysis strongly suggests these political maneuvers were absolutely essential to inflating the valuation to $1 trillion. Finally, Section 6, wealth disparity and taxes. Ultimately, the source contrasts the mechanics of this immense politically shielded paper wealth against the stark reality of the everyday tax-paying citizen. Between 2014 and 2018, the data shows this wealth grew by an astonishing $13.9 billion. However, because of that buy, borrow, die strategy we talked about, and the very nature of paper wealth, only $455 million was paid in taxes. That is an effective tax rate of just 3.2%. Contrast that with the average working-class U.S. citizen, who pays anywhere from 20 to 30%, averaging around 25% in income tax. The source uses this stark mathematical reality to argue that the current economic system fundamentally operates on two completely different sets of rules, heavily favoring those who hold capital over those who earn a salary. So as the analysis concludes, we really have to look at all these moving parts and ask ourselves a pretty tough question. Is $1 trillion net worth the pure results of genuine, world-changing innovation? Or is it an illusion built on psychological market hype,
strategic tax loopholes, and timely political favors?
It's a really profound question about how we value companies and what it truly means when paper wealth detaches so drastically from earthly reality. If you enjoyed this explainer, don't forget to like, subscribe, and turn on the notification bell for more amazing facts and hidden truths. Thanks for watching.